If there's a failure to deliver, it might be at $55 or something, and you wake up the next morning and suddenly it's above $100 or $80, and you didn't have a chance to buy between those times. It would actually be good for silver to sort of take a rest, and I always expected it to as it runs into the $50 area. If it goes sideways for a couple of weeks, it works off the overbought condition that it's in and allows a lot more room to run. However, in a currency crisis, in a market crisis, all of that stuff, overbought conditions, it all goes out the window. None of that technical analysis matters when you have a true panic with the precious metals. The precious metals are a very special asset class that sort of obeys its own rules.
Silver investors, listen closely, because what we're about to discuss could change everything you thought you knew about this market. Imagine waking up one morning and silver isn't $47 or $50, but suddenly trading at $80, even $100 an ounce. No warning, no dip to buy, just a straight leap higher because the market simply ran out of supply. This isn't hype. This is the real risk of what's called a failure to deliver. And according to veteran analyst Mike Maloney, it may be coming sooner than anyone expected. In this video, we're going to break down exactly what that means, why history shows us this move is possible, and why the current setup is unlike anything we've ever seen before.
Here's a quote: "Silver is going to fail to deliver, in my eyes, within the next few delivery periods. So I think before year end, you're going to see the silver market break." And that's from Bill Holter.
And you know what? Bill, I believe, is right. Once silver passes this $50 threshold, and we're just, that's what my previous videos were about. We're just about there. It gets into the news cycle. The mainstream media will be reporting on this. And as it goes north, they are going to be reporting on it at first, a few, and then it's going to be every week, and then every day they're going to be hearing about silver, the general public. Now, it also goes along with October is the spooky month, this month that is famous for crashes. And there's going to be a video upcoming that's all about the economy and showing you where we are right now. And we really are teetering on that knife's edge. Bill is probably right. As it goes past 50, 55, 60, and people learn about all of the fundamentals underlying silver, about the fundamentals underlying, the video that we did showing that there was $20 trillion worth of liquid capital that can come chasing any investment in like 24 hours. That was just America. When you take it to the world, I covered that in one of my videos that I just recorded. It's actually 3.5. If you take 1% of the 20 trillion, that's 200 billion that could come chasing silver. There isn't enough silver at these prices to support anything near that. And 1% is a nice conservative figure. But when you add in global currency supply and global stocks and global bond market, now you're at 3.5 trillion that could come. It's 350 trillion is the total of those things. You're at 3.5 trillion that could come chasing the precious metals. And that's only 1% of these things. The liquid capital, the stock market, and the bond markets globally. Because when we talk about how much gold and silver there is, that's globally. That's what we're talking about. So you've got to compare oranges to oranges. So, that's right. And gold is orange.
That's right. Exactly. Well, in a recent video, you did mention that silver is setting new records on the yearly close and the quarterly close, and we're probably going to get a record on the monthly close. And I want to talk about another record. It's actually the length in the amount of time that silver has closed above $40 an ounce. So I want to take a look at the market structure and see how this bull run is a little bit different than the previous ones. So this right here is a chart of silver. Obviously, it's that long-term cup and handle, that 45-year cup and handle that you identified more than a year ago. And I took the liberty of coloring the time it's spent above $40 an ounce in red. So we can see that there's really three distinct phases, and I want to zoom in on them. So this one back here in the 1980s looks like this. This is a 2-month period, and there were 6 days in a row silver closed above 40, and then another day and another day. So 8 days total. But you can see this isn't really sustained. It didn't really feel strong. You can see that it kind of sputtered and died out. So anything you want to say about the 1980s peak here, Mike?
Well, that was a super spike. And compared to the rest of the economy, that was a hyper bubble, which gold and silver are destined for far greater hyper bubbles this time, because this was only Western Europe and North America driving this. Australia was included as well, but it was 10% of the world's population. This time it's going to be everybody. There was, I think, I can't remember the amount of, we're up to 80 times more currency now that you've updated it. When we released the book, it was 55 times more currency on the planet. And all of this, and then the size of the bond markets, and then the trouble that the economy is in, the levels of debt to GDP. In 1980, it was down at 30%, not 120%. The economy, the US dollar, everything is in a vastly different position than it was during those 6 days and the added 2 days. So there was only 8 days when silver was above 40. And like I said, gold and silver both went into super spike hyper bubbles compared to the rest of the economy. And so if you put a super spike today with the growth of everything else we've had, you and I come up with these astronomical figures that sound irrational, yet if you do the analysis, it's the only rational outcome.
Exactly. It's all supported by numbers. We just take the numbers. What does it imply? Okay, this is the math. So,
yeah, it's just history repeating, adjusted for inflation.
Yeah, exactly. Well, let's zoom up on the next peak in silver. This is April of 2011, and it's been 17 days in a row above $40 an ounce. And you can see it did have some momentum, obviously getting there, sustained over several months. And then it dropped off and sort of petered out. And then something similar happened later that same year. But before I move on, is there anything you want to say about this chart, Mike?
Yes, because this is silver. And I knew that this wasn't the top, because when the top comes, gold and silver will be peaking simultaneously. This happened in April for silver, but August for gold. And that is not indicative of people being worried about the economy or about a currency crisis. That is people chasing a bubble, basically. It's fear of missing out. It has nothing to do with the underlying fundamentals. So this 17 days, it was spectacular. I remember it. One of the things I wish I could have advised people to do this or do that. I never give advice, but silver had taken one great run, but I can't tell people that it's time to sell when I don't know if things are going to keep on going north and whether or not the dollar is in trouble. I have to just stay back and say what I'm doing and never give any financial advice. And I was not buying silver on those days because the gold-silver ratio was telling me not to. Gold was not going into a peak with silver, and the gold-silver ratio was gold was becoming undervalued compared to silver. And so it was telling me to buy gold, and that's exactly what I was doing. So I never purchased silver above 33, but I'm about to. So because the gold-silver ratio is telling me that silver is still a bargain, a screaming bargain.
Yeah, can't argue with that. Well, beautiful. Well, later, the second half of this year, so this is what we're looking at here is a chart of the first half of 2011. So now let's look at the second half of 2011. And the price of silver went above $40 an ounce 7 separate times, but it really failed to stay up there at any sustained level. it went up for 1 day and then again for 1 day and then 4 days and 2 days and 5 days and 14 days and then 1 day. So the longest stretch there is 14 days.
Yeah.
In total, 28 days throughout the second half of the year. And then it dropped off, as you can see. So not really sustained above $40 an ounce. But now we have a very different picture, which I'll show you in a second.
Yeah, this was when gold was peaking, and that's what was pulling silver up. This time period was gold's big run, sometime in August, probably. Where silver peaked on this chart, right under that number 5. Okay.
We are living through one of the most dramatic periods in the gold and silver markets. Just recently, gold broke above $3,800 per ounce, driven by deepening fears about U.S. debt, global instability, and central banks accelerating their buying. Silver, meanwhile, has outpaced gold's performance in 2025, surging more than 55% since the start of the year and hitting fresh highs in multiple currencies. India's imports of both gold and silver nearly doubled in September, even at record-high prices. Major banks, including HSBC, are now revising their silver outlook upward, citing both gold's momentum and escalating geopolitical risks as drivers. The stage is being set for silver to do something historic. Mike Maloney's message cuts through all of the noise. He believes once silver crosses the $50 to $55 level, the market could experience a delivery failure, a moment when physical supply simply cannot meet demand. If that happens, silver could gap up overnight, bypassing the 60s and 70s and opening the next morning at $80, $90, or even $100. In other words, no one would have time to buy in between. Technical conditions like overbought readings or sideways consolidations don't matter in a panic. In a true crisis, precious metals follow their own rules. The amount of capital that could flood this market is staggering. In the U.S. alone, $20 trillion sits in liquid form. Just 1% of that, $200 billion, chasing silver would overwhelm the market. Globally, when you add up liquid stocks, bonds, and currencies, the number is closer to $350 trillion. 1% of that equals $3.5 trillion. The physical silver supply at today's prices simply isn't large enough to withstand that kind of demand. That's why even conservative allocations of capital could spark an explosive move higher. History gives us perspective. In 1980, silver spiked above $40, but stayed there only 8 days. It was a bubble fueled mostly by Western economies, at a time when global debt to GDP sat at 30%. In 2011, silver held above $40 for 17 days, but gold didn't peak alongside it, signaling a speculative bubble rather than a real currency crisis. Today, the story is entirely different. Debt to GDP in the U.S. has climbed over 120%. Global money supply has multiplied exponentially, and silver has already logged more than 20 consecutive days above $40, showing far greater strength and sustainability than in past cycles. According to Maloney, this is the setup for something much bigger than a short-lived spike. It's the beginning of what could be the final phase of double-digit silver. This is why many analysts now argue we may be watching the last days of sub-$100 silver. If a delivery failure occurs, the market could instantly reset higher. October has historically been a month for market shocks, and this one may yet deliver a surprise of its own. Silver isn't just climbing, it's building the foundation for a hyper spike that could redefine the entire market for years to come.
This is what it looks like now. We're already 20 days in a row closing above $40 an ounce. And obviously we keep setting, record highs. We're building a lot of momentum. And this kind of momentum is sustained over multiple years. This chart goes back to January 1st of 2023. So we're seeing almost 3 full years on this chart. And it just looks like it's going higher and higher and higher. No end in sight.
Yeah. It would actually be good for silver to sort of take a rest. And I always expected it to as it runs into the $50 area. If it goes sideways for a couple of weeks, it works off the overbought condition that it's in and allows a lot more room to run. However, in a currency crisis, in a market crisis, all of that stuff, overbought conditions, it all goes out the window. None of that technical analysis matters when you have a true panic with the precious metals. The precious metals are a very special asset class that sort of obeys its own rules. And we showed that in our book, The Great Gold and Silver Rush of the 20th Century. when you get to the area, the section on Giffen goods, and the gift of Giffen was the section. And in there, we showed that something I noticed many, many years ago. If you take a chart of gold and flip it upside down, it looks like the stock market. It's got rounded tops when you flip it upside down and very sharp, spiky bottoms, just like a market crash. So when gold is going up and makes these spiky tops, it's the same emotions as a market crash for the rest of the economy. One last thing. This could continue right to the end of the year. This could just keep on going north, or it could take a little pause, like I said. It could do a little bit of a pullback.
And we could get that failure to deliver that Bill Holter was talking about at the beginning of the video. So only so much physical.
If that happens, you're going to see these things. I showed an analyst from TD Securities talking about gap ups. And that's what will happen. If there's a failure to deliver, it might be at $55 or something, and you wake up the next morning and suddenly it's above $100 or $80, and you didn't have a chance to buy between those times. We could be seeing the last of double-digit silver this month. It could happen all this month. Who knows?
Yeah, and we got Shocktober coming up, like you said. So,
yeah.
So let me ask you, if silver jumps from $55 straight to $90 in a single session, would you be ready, or would you miss the move? Do you believe we're already in the last phase of double-digit silver, or do you think there's still more time before the real panic begins? And what's your own strategy? Accumulate now, wait for a pullback, or diversify into both gold and silver? Drop your thoughts in the comments below. If you found this breakdown valuable, make sure you hit that subscribe button and turn on notifications so you don't miss what comes next. The precious metals market is moving fast, and this channel, Macro Edge, is here to keep you ahead of it. Smash that like button too. It helps this video reach more people who need to understand what's unfolding right now. Silver may be about to make history. The only question left is, will you be ready?